Ladies and gentlemen, good evening. This is Christopher Aaron, and thank you for tuning in. It is the 1st of November, 2017. How the year is just rushing by. 2 months left to go. Let's see how things finish here. We're going to look at some examples in this video of some past cycles. I want to give you a little bit of a history of how I have gravitated toward this form of technical analysis. Some of the times that this was really useful in the past. Let's compare that to the present. As we get into looking at the precious metals over the last 3 trading days, we usually start with that just to see, is there anything that we can discern here on the short run basis, any important pivot points, any important support and resistance levels that we can observe. Gold continuing to grind in the recent range, the upper 1260s to mid 1270s. Not much that we can see here from gold, especially anytime you see on this y-axis, the $2 bars, courtesy of Kitco. Thank you very much. Anytime we see the $2 bars here, we are talking about very low volatility. And this is strange given that there was a Fed meeting today. No change in the interest rate policy, although we are expecting President Trump to announce his new candidate for Fed chair, most likely tomorrow. There are some rumors that the Fed Governor Powell will be nominated, but let's wait to see what happens. Anyway, a little spike here at 2 p.m. On the Fed non-announcement. Basically nothing for the gold market. So that is rare to see on a Fed day. Looking at silver, much stronger today than gold. Isn't this interesting to see? So the reason why we do this every week generally is to see, are we noticing relative outperformance from one metal versus the other? We are. This week we're seeing outperformance from silver, which tends to be a good signal for the entire metals complex. When silver is outperforming, we see the lowering in the gold to silver ratio. This tends to be a signal that money is moving into the complex as opposed to out from the complex. So also noteworthy that this happened in the overnight hours here in Asia. Let's look at a lesson from history. I want to just give this little anecdote about a time in my life. Now, I became interested in technical analysis back in 2003. I was working for a large bank here in the Northeast. And at the time, as an entry-level employee working for the bank, I remember I was processing some of their trades at the time. And I remember seeing certain days where they were, having a successful trade where they'd make 3% or 5% or 10 or 15% on a single trade. And I remember at the time, as a recent college graduate, I remember thinking, wow, that's quite a lot to be making on a single trade, especially when here I was, and at the time I think interest rates on a savings account were somewhere around 1% per year. So, if you're making 1% per year and then you're processing these trades for a bank and they're making 5 or 10% on a single trade, all of a sudden I got to thinking and it was like, okay, I'm missing something here. So I remember this is when I first started to get into technical analysis of the markets. And I would print out these pages from technical manuals. I would print them out and I would read them on the train ride home every evening. And this is just an example of that, the falling wedge pattern here that we see. It is a falling pattern, but it's actually a bullish falling pattern. And so this is one of those really off-the-wall type of patterns that moves counter to what one's instinct would suggest. Falling prices that leads to a breakout to the upside. I remember studying things like this. It wasn't until 2008 that I really began to implement this in a practical kind of way, and that was related to my study of the precious metals, which had begun a few years prior. And I remember I'm pulling up an actual chart. I made this chart on the 29th of October, 2008. I remember the day specifically that I made this chart. So as a backdrop, silver had crashed by 50% in 3 months. Okay, now people are getting frustrated now because silver's oscillating between $1 or $2. Silver had fell by 50% in 3 months in the crash of 2008. And can you imagine the silver miners, which are leveraged to the price of silver? Many of these miners fell by 80 or 90% in 3 months. And I see people throwing in the towel now, and, to each their own. Everyone has to pursue the path which seems best to them. But, I see a lot of negative sentiment in this sector because, prices of some of the miners have gone down 30% over the last few months or whatnot. I'm just saying I remember this was my first rude wake-up call to the sector, that things can fall so much quicker than we expect. This was even as the fundamental base analysts in the world, I won't mention their names, but in 2008, the fundamental based analysts who thought that because they correctly foresaw the crash coming, that therefore the precious metals would rise, they were 100% wrong, at least over the intermediate term. Anyway, back to the chart. So I was studying this time period. I made this chart on the 29th of October, 2008. I've had it saved on my hard drive since then. And I remember drawing these lines, looking at this wedge formation at the time, which had formed as silver was still falling after this bounce in September, and then falling and falling and falling and falling below $9 an ounce. And I remember seeing this one day where all of a sudden it popped above this falling trend line here. And I was saying, that's interesting. Now, the sentiment was still horrible. The miners were still falling. Everyone was convinced the world was about to end. Hank Paulson was getting on the TV and telling people if they did not basically sign away their future by allowing the Fed to bail out all the banks, that there would be no food on the shelves, there would be riots in the streets, etc., etc. So everything was crashing, and I see this little break of a simple little line that I drew here. This reminded me very much of a falling wedge, as we were just talking about. Now, I ended this chart here on the 29th of October. Let's move this chart just forward a little bit. Here's the same wedge. We're looking at that. And I remember thinking here, as we're looking at the breakout and the bottom, I remember thinking over the course of November 2008, if you look what happened to the prices here, as we indeed bounced after breaking this wedge, then look what happened. A few weeks later, the prices actually came back down below the breakout point. Can you see that? Below this declining line. Below the breakout from this declining line. Falling back down into the nines, the low nines per ounce. And so I remember thinking, well, this is not something that was told to me in the textbooks that I was reading on technical analysis. So I was thinking, now, is this pattern, which is supposed to be bullish, has this failed? Because prices have come back below the breakout point. And I said, well, this will be something that I learn from. And as a side note, I was just plowing money into a lot of the miners in this crash that had fallen, and they recovered quite a bit, which was the first real success that I had in the precious metals market. But the question is, so was the falling of the price below this trend line, below the breakout point, the falling of the price below the breakout point right here, was that a negation of the pattern? And I just had to let history play itself out. So we back that out to the 3-year time frame. Here was that wedge that I was talking about. You can barely see it. You can barely see the breakout. Prices did indeed fall below the breakout point once again. But what did this entire thing represent from the long-term basis? Nothing less than a terminal bottoming wedge pattern. It took prices 2 years to climb back up to where they were before the crash. some nice fortunes were made in those 2 years, and then we had the real blast-off final move here in late 2010. So this was the first lesson that I had as to the power of technical analysis, right? When sentiment was at its worst, everyone was throwing in the towel. Government officials were claiming that this was going to be the end of the financial system as we know it. I was just looking at this one little simple line, and it was breaking out, and I said, okay, let's track this. One other quick example, we had gold in 2008 through 2009. From the previous high, just above 1,000, we draw a little trend line in here. We could see a peak, a lower peak, a lower peak, a lower peak, right? So a falling trend line below $1,000 an ounce. The break of the trend line right here, a surge higher, and then what? A retest. But what happened? The retest was lower than the breakout point, right? And so anyone who sold here in the retest, just looking at price alone, not paying attention to trends or technical analysis in this heavily manipulated market, and if you think that this market was not manipulated during the crash of 2008, then you've got another thing coming as you study these markets, because this market crashed in 2008. So if we can perform a basic technical analysis on this market, which was being manipulated at the time, and we can say that the breakout happened here, the retest happened here, below the breakout point, and what was the ramification of that? Here was that downtrend, breakout, retest. This was the lowest point for the next 3 years in the gold price. Anyone who sold on this retest, just looking at the price alone, missed this, and there was never a chance to buy in at these prices again. The price never got this low again. It has not to this day. Retest can occur lower than the breakout point. Here we are on the present. There was the example I was just looking at, the breakout, the retest happening below the breakout point. Here we are today. It's an even longer downtrend. The breakout has already occurred. The retest is now underway. It's happening below the breakout point once again. And I see the pessimism in the sector. It's to be understood. Should you place 100% of your capital or your faith into this guy talking on YouTube? Probably not. If you were going to do that, I would say you might want to subscribe for a few $100s first and see the full depth of the analysis. But even when you do that, you probably shouldn't place 100% of your faith into any one system or signal. But is this signal correct a fairly decent number of the percent of the time? Yes, it is. A fairly decent number of times, yes. So it's something to consider. Technical analysis does work even in markets that are manipulated. Nothing works 100% of the time. It's about stacking the odds in our favor. Here we are right now. We're on the retest right now. I do thank you for watching. I do produce a premium research service that comes out every week. The last one that went out was like this, but it was about an hour and 10 minutes long. We covered the stock market, the bond market, the miners, silver, as well as a number of other leading indicators that we're looking at. We're trying to time when the stock market is going to top out. That's the big point. I also do individual consultations on a one-on-one basis with individuals, all the way from beginning stackers to traders in options and futures. You can find more about that on the website if you would like to speak one-on-one about your situation. I also wanted to mention there's a link below this video. There's a link to a dealer who I have a relationship with. Bullion exchanges. You don't have to buy. If you are in the market to sell also, which I think is valid at certain times, I do think probably this isn't the best time to sell, but sometimes you have to sell for one reason or another. Bullion exchanges, I have a relationship with them. They'll give you $10 off your first order of $300 or more. Give you a chance to try them out. If you like them, maybe it's a dealer to stay with. If not, you can stick with another dealer. That's fine. I just wanted to put that out there. The link is below. I have visited them in person, and I know the dealer. I know the owner of the dealership personally. So that should wrap it up for today. Pay attention to this retest as it occurs. If you're technically inclined, if you like this form of technical analysis, this is the thing that we focus on here for a reason, because it's more objective than just the fundamentals only. And if you're just getting involved in the technical analysis and you like this kind of thing, as I did back when I was first studying it, I would just say really take some notes and make an effort to keep track of what's happening day in and day out in these markets, because we will learn. We all will learn together. I am learning still from this time period. And I think if you're interested in this, this is an excellent time to take notes, study charts, make copies of charts like I did back from 2008, and heck, refer to them 9 years later like I have done tonight with you all.